Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We have some great shows coming up for you, including separate shows with market updates and projections for the office, retail, and industrial real estate markets. Don't miss a show of special interest to you. Sign up for a once-a-week email announcing the show topic at commercialrealestateshow.com. Our topic today is Rebirth of the Housing Market. Please welcome Steve Palm, President, Smart Numbers. Steve, welcome to Studio One.
Well, thank you, Mike. I'm always glad to be here and visit and share some of my advice.
Well, thank you. And please welcome Sebastian Drapak, Executive Director, Drapak USA. Sebastian, welcome to the Commercial Real Estate Show.
Thanks for having me.
Well, gentlemen, the big story in real estate these days seems to be the huge increase for demand in land. You know, Steve, what do you see for lot supply and demand in the markets that you track?
Well, we're primarily in the southeast and central locations, let's say in Atlanta or Charlotte or Orlando. The closer into the core city, lots have been gobbled up and we're building again. However, in the outlying areas, especially in a market like Atlanta, it's a very high lot supply. We have some areas that are still centuries of lot supply. But in the inner city, let's say not inner city, but for Charlotte, Orlando, Atlanta, we are out of lots and now we're buying land. About 2 years ago, we started having feasibility come in where we were analyzing tracts of land because we were out of the good lots and the good locations. And what happened there was the good resale values were coming back strong. People needed the new construction, created the demand, and therefore we had new construction, bought the lots, built on the lots. Now we're out of the lots and now we're going after the land.
It's been a crazy market. I think in our shop, you know, we do all types of property types, and land has been the big story with a big increase in demand and values for residential land and commercial land. And Sebastian, you have a global perspective on the U.S. housing and land market coming from Australia. What do you see for the trends in USA right now?
Look, we believe the US market post-recession is very similar to our market was in the early 1990s when we had our recession. Three things happened back then. The first thing is that land development as an industry broke down. So we stopped producing residential lots. They just weren't viable to develop. The second thing is that land values generally just returned back to agricultural values. And the third thing was that there was no price differentiation between sub-markets. And there's a lot of similarities with the US today.
Sure is. Yeah.
And Australia back then. And since then, our land and housing market has boomed and hasn't slowed down. So if you look at Australia, Melbourne, for example, where I'm from, it's the fourth most unaffordable city in the world to buy a house. Sydney, which is just north of us, is the third most unaffordable market in the world to buy a home. So we've seen that firsthand. And what we've tried to do is we've watched the market recalibrate, and we've tried to intellectualize why it happened and what's going to happen next in the US. So look, I think it's already started in the US, and I don't see why it's going to stop this recalibration and this recovery.
So how much is a home in Sydney right now?
Mid 500s.
Yeah, and the same home here is what, 150,
170, 180.
Right. It's interesting.
Our affordability ratios are some of the highest in the world.
Yeah, Steve, let's talk about prices. What do you see for current new home and lot prices right now?
It's going to sound redundant, but again, in the close-in, good areas, good school districts, lot prices have pretty much almost popped back to where they were, pre-crash. However, very rarely, lot prices, I'm still seeing lots transact 30 miles away from our core cities for $1,000, $2,000, $3,000. However, resale prices have just rebounded at a historic fast pace. And that bodes well for the new home prices because new has what's called construction costs, lumber, concrete, and those prices have been edging up. So what happened with resale prices rebounding at a great rate, almost up like, let's say 70% from the beginning of this year to right now,
Wow.
Believe it or not. It's gone from like 158 to 240 in just 9 months. And that's what we see, and now what's happening now as these prices have escalated, they're now bleeding over into the collar counties. Again, we just follow the southeast, but they're all following the same trend. Close in good areas have really done very well. And I'm going to use Atlanta as an example. We cover 26 counties, and 5 counties this year have accounted for 74.6% of all new construction. But what's happening, again, those lots are getting absorbed, and we're seeing the bleed over into the collar counties in Charlotte, Savannah, Orlando, Tampa, Atlanta, and I only see this to continue for at least the next 4 or 5 quarters.
That's amazing. And when you see those sort of price changes that fast, and you also see some of these areas that, like you said, there's still a lot of supply. So there's a lot of opportunity out there. And we're going to talk about some of the opportunities out there and what we're seeing in the marketplace. So stay tuned. We'll have more on the rebirth of the housing market. I'm Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. You're invited to check out Commercial Real Estate Show TV. That's right, I said TV. Visit YouTube and search for the channel Commercial Real Estate Show. Our topic today is the rebirth of the housing market. We're talking with Steve Palm with Smart Numbers and Sebastian Drapak with Drapak USA. And Sebastian, you've come from Australia. You've been over here buying land. When did you first buy your first lots and land, and what have you seen for price changes from when you first started buying to today?
Sure. We first came over in 2009 and spent it took us 2 years before we bought anything. So it was a process of elimination to find out which markets fit our model. So I guess the best analogy is imagine getting on a bus from Seattle and going all the way to Miami and stopping at every major city along the way. And that's essentially what we did. So we basically scoured half of the US. Back then, 2 years ago when we bought our first asset, it was usually just us in the room and one other buyer, another crazy investor. No one knew why we were buying or who we were, what we were doing. And what I've noticed in the last 12 months, that's changed dramatically. So the buyer pool has increased significantly. Builders are back in the game, national builders, local builders, and there's a lot of investors. So the competition's increased since we first came. The first 2 deals we bought were, one was in upper middle class Detroit, a suburban Detroit location, some finished lots. And the other site we bought around the same time was a finished lot deal with some raw land entitled for residential lots in Gwinnett County in Atlanta. They're the first 2 deals that we did.
So what kind of price changes are you seeing from those first deals to today?
In terms of lot prices in A, B, C locations, I'm seeing growth between 50 and 150%.
Wow.
So massive growth. In C and D locations, not as much, but they're catching up dramatically.
And what do you see in the numbers out there that cause you want to continue to buy land right now?
Look, with raw land, what's happening is the prices haven't jumped yet. So you can still buy raw land at basically agricultural values or just a slight premium on top of that. And the reason is because the land's not viable to develop as yet. That's why we can still buy land. The same price we're buying land for today, we're buying for 12 months ago and 24 months ago. And rightly so, because when that land becomes viable, when the industry returns, it's just a matter of time. It's when. It's not if, it's when, but who knows when.
Okay. And so the numbers out there suggest to you that it's going to continue to improve, and how do you analyze those numbers?
I think the first point is the market's very complex, Michael, like very complex. I don't think people really understand how complex the US housing market is today. There's a lot of moving parts, and we're in uncharted territory. What we've noticed is that the data has been misinterpreted by a lot of people. I mean, who would have thought in the last 12 months Atlanta would have had its largest home price increase in history? Not during subprime, in history, the largest home price increase. We've seen markets go from 30 years of supply to 12 months of supply in the space of 3 years. No one predicted that. So, the issue is the data's been misinterpreted. So I guess, taking a macro point of view, our approach is expect the unexpected moving forward.
Yeah, it's a crazy market. And Steve, what do you think about the numbers? What are they suggesting to you about velocity and pricing moving forward?
As these resale prices have jumped up, of course, we're going to have more demand for new. But at the same time, And we look out maybe 4 quarters. I'm looking towards maybe the midterms. I expect these prices to continue to increase the next 4 quarters. I expect more construction for new homes for the next 4 quarters. Not dramatic increases. I'm going to say the high growth markets, using, let's say, Phoenix, Vegas, Atlanta as an example, we could be up 20% next year over this year. But let's say the smaller markets where there's not as much demand and they have not taken the hit as these high growth markets did in the past, maybe 10%.
Okay. And Sebastian, which markets around the U.S. are you bullish on right now?
We're interested in markets that haven't recovered yet, and they're coming off a low base, or haven't recalibrated yet. We're not looking at Southern California, for example, or Phoenix, because the ship sailed a long time ago. So we like coastal markets, markets that have enduring demand. And what that means, Michael, is they've been building homes there for 50 years, and we believe they'll continue to build homes moving forward.
So you're looking at both undeveloped lots and developed lots when you can find them?
Correct. I mean, the developed lot story is basically over. It's very hard to find any developed lots to buy. Mm-hmm. And if you are, you're buying from someone who's bought over the last 2 to 3 years, and they're looking for a big premium. So we find the opportunity at the moment is to buy raw, entitled residential land.
And I suppose you've received a lot of interest from banks to buy their lots in the past. What do you see for inventory now? Are the banks do they still have some inventory, or is it pretty much depleted?
I think there's still a bit to come. I mean, who knows how much there is to come. I'm noticing that the bank deals are drying up, though. Mm-hmm. They're few and far between. And there's a new wave of seller, which these big institutions that bought large pools of debt, mm-hmm. they're the new wave of sellers in the market at the moment.
Yeah, that's a good point. Steve, what do you see? Is there more distressed land out there coming?
We coined that ring of death back in about 08 and 09, and there's a lot. We have 120,000 lots in Atlanta alone that are available.
And then those, you're talking about the ring of death, you're talking about the area that's kind of too far from downtown?
Yeah, something that was like a little bit too opportunistic back in 07, 06 when prices were just going up 12, 13, 14, 15, 17% on lots.
Now, has the ring of death, has that moved out any, or is it still the same distance from town?
It's stayed there. It's more like a skinny donut now than a big fat donut. But it still exists, and we're not, and it occurs in every one of our markets. You might have some zombie subdivisions that may never come back.
Yeah. Well, I think that we thought that as well on some of these subdivisions that have come back pretty quick. So it's a crazy market. We'll have more on the market for you on the rebirth of housing. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by France Media. France Media provides exposure to the world of commercial real estate. Visit francemediainc.com or call 404-832-8262. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. You're invited to connect with us on Facebook, LinkedIn, Google+, and Twitter. You can find them all at the show website, commercialrealestateshow.com. Well, today we're talking about the housing market. We have Steve Palm with Smart Numbers here and Sebastian Drapak with Drapak USA. And Steve, what are some issues that could cause some headwinds in the housing market?
Yeah, that's a very good question. I'm going to use Atlanta again as my example. And at Atlanta's peak, they were building 57 new construction a year. And now we might do 14,000 this year. We did 9,000 last year. If we even wanted to do 20,000 homes next year, we need more labor, and it's just not there. And then number two, we have had just a huge increase in commodity costs. And hopefully oil can stay relatively low, but if we saw oil pop up, let's say to $120 a barrel, that could really add another damper to a lot of our commodity costs. Number three, if a lot of these funds start unloading their rental units, again, there's just a huge amount of homes that are being rented right now. They've gone up a lot in price. If the investors want a big return quickly, they may have pressure on these investment capital firms to start selling off their assets quickly.
Okay. And it seems like there's a lot of pent-up demand that people have been cautious about making decisions with what's going on with the government and jobs. What do you think about future demand, Sebastian, for lots and new homes?
Okay, I mean, to start, I think that the data is quite compelling. The story is compelling that demand's increasing, supply is shrinking, there's upward pressure on prices. No one's arguing that. But the question is, what happens next? What's going to happen moving forward? And we've been saying since 2011, early 2012, that we think that America is going to have its biggest land shortage in history. In history, we're in uncharted territory today. I mean, look at the facts. The US has been producing 1.5 million homes, excuse me, per year for the last 50 years. This is, if you look at 1970, when the population was 30% less, they still produced 1.5 million homes. When you look at the numbers, during the boom, they built 2.5 million too many homes, and during the bust, we built 4.5 too few homes. So there's that pent-up demand, and you've got demographics, population, household formation, all supporting this, what we call a recalibration back to normality, a boom back to normality. So we think it's going to go back to long-term historic averages, which would be 1.5 mil in terms of housing starts. And like any overcorrection, it always overcorrects and it always undercorrects. So I think it's going to be a very interesting, 12, 24 months.
Yeah, I think you're right. I think it's going to be a crazy market with value increases and rate increases, even in the commercial world. Well, guys, you have a closing tip for us, Steve?
I like condos. I'm a baby boomer. I'm getting up there in age, and I can see a lot of movement from my age group going into close-in condos, less stairs. And number two, builders, I've started to see them chase stuff again. We made a lot of mistakes back in 05 and 06 chasing those high inflated lots. Don't make a bad decision. Make no decision if it's not there, and you'll be fine, because there's going to be a lot of deals coming. Just wait for the right one.
Sebastian, quick tip for us?
My tip is just to expect the unexpected.
Yeah, so because we don't know. Like you said, it's uncharted territory, right?
Correct.
And I think when people feel a little more comfortable making decisions with expanding their businesses and buying homes and not renting anymore, we could see some big demand, especially with interest rates as low as they are. I mean, even if rates slightly increase a little bit, they're still just historically low. Well, gentlemen, thanks for joining us today. We sure appreciate you being on the show.
Thank you.
Thank you. Always enjoy it.
Well, be sure to join us next week. We'll explore the U.S. office market. The way companies use office space has changed a lot in recent years. So we'll look at the latest corporate office strategies and how slow employment growth is affecting the office market and what we should expect moving forward. Well, thanks for joining us today. I'm Michael Bull, and this is the Commercial Real Estate Show. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by your friends at Bull Realty, France Media, Atlanta Office Liquidators, and Wiseman, Nowak, Curry, and Wilco. For more information about these companies or to access additional show podcasts, videos, or blogs, visit commercialrealestateshow.com.